take us into impulse, and the impulse should be massive. Okay, if this is the impulse that is meant to take us to 1.7 million in Q1 by Q1 of 2023, so the next 6 months should be massively bullish. This may be the absolute last corrective move for Bitcoin, okay, and most other cryptocurrency assets, right? So this is what we're looking at here. Looks like a massive bounce in Litecoin. All right, so now let's talk about the macro, okay? Again, enough with the small time frames. We're gonna monitor this throughout the stream, okay? But let's look at the macro. Why am I bullish for the next 6 months, okay? Let's look at Bitcoin's larger chart. Let's go on the weekly time frame. Let's turn on the log. Okay, and we can see here. This is my entire sort of analysis of Bitcoin's price action throughout the 13-year life cycle. All right. We don't need volume, so let's turn that off. And you can see here, it looks as if we're in minor wave 2, okay? You have minor wave 1, minor wave 2. This minor wave 3, if it were to proceed along the resistances and the support levels of this channel and just typical, Elliott wave theory, where you can expect wave 3 to extend to about 1618 to 2 Fibonacci extension of wave 1. You can see that it should hit around here between 1.5 and 4.3 million, okay? So, and the time frame for that, given Fibonacci time extension or time estimate, because it's not just price but also time that we're looking at, should be around Q1 of 2023, okay? So that's about 6 months, and that also corroborates or coincides with the top resistance of this channel, this rising channel, okay? So that's Bitcoin. That's basically, if you're subscribed, you'll know that I've been saying, I actually have a specific date, February 19, 2023, okay? That's when I think Bitcoin's going to top thereabouts. Right, again, that's just a placeholder. Doesn't necessarily mean it has to be exactly that, but it's a placeholder, okay? Now, for, let's see, just give a quick look, see who's bouncing, what's bouncing, because this should be a violent bounce. We expect a violent bounce. If this is indeed an AB base, and this is the end of the AB base, this should be the start of the new impulse. We should see violent reactions to the upside, okay? So that's what I'm looking for. Let's just quickly see if anything's popped in the market. Let's go to Crypto Bubbles. Guys, don't forget to like the stream, follow or subscribe if you're not yet subscribed. So just looking at the top, let's look at the top 100. We'll just keep an eye on this. I don't know if anything's bounced yet. No, nothing yet. Okay, we'll monitor this for the time we're streaming together. All right, so let's look. Actually, I think I turned down the music a little too low. Yeah, can you guys hear it? I think that's better. All right. Now let's look at equities. Let's look at traditional markets. Let's look at the S&P, the SPX, okay? So, why am I bullish for the next 6 months? Because I understand right now that cryptocurrency and traditional markets, the SPX, NASDAQ, they're correlated, right? SPX goes up, crypto goes up. SPX goes down, crypto goes down. What I have here is SPX indeed in correction, okay? Let's get that straight. SPX, to me, from what I'm reading, is in correction, right? So what we had here, what I've shown here is the three waves that I think are likely to kind of play out given this first wave, okay? We've got a three-wave move. Given that we have a three-wave move, I think we're gonna print a flat correction. A flat correction is, something like this, a 335 correction, and sometimes it's like this, and a lot of times it's expanded, meaning right here, as you can see, the B wave comes up above the origination of the A wave, okay? And it typically does that to a maximum of 1618 Fibonacci retracement. So if you take this, you can see, wow. Guys, I didn't even do that before. I promise I didn't do that before. I didn't look at that. I didn't use my Fibonacci retracement to set that level. I just eyeballed it, and I used this trend line, this dotted trend line, which I'm going to show you in a second, which is basically what the SPX has been doing since 2009. So I drew a trend line here because we've been respecting this trend line. Do you see? So again, this is strong because it's old, okay? Whenever you have something that lasts for quite a bit of time, you know that it's a strong relationship. So a 2010, this is what, a 12-year trend. So right here, rejection, right here, rejection, right here, rejection, right here, rejection, right here, rejection. It's just been respected so often. I can't not pay attention to that trend line, right? That 12-year trend line. Yeah? So given that price keeps trying to test that line and gets rejected from it, I don't think it'll be any different here in our ABC flat correction, as you can see, right? It's a 335 expanded flat, okay? And as we know, the B wave of this A wave can only extend between to as far as the 1618, and that's exactly what you have here, okay? And that both respects the trend line, and that both respects the norms of an expanded flat, okay? So this is why I'm bullish for the next 6 months. If you take the time it took, okay, first let's set the context. If you don't know, let me not make this assumption. So when I'm reading this price action, for the S&P 500 on the weekly time frame, I'm not exactly sure where we are, okay? I'm not going to assume that I know exactly, this is, minor wave 2 of, intermediate wave 3 or whatever. I don't know. It doesn't matter. I think what's most important is you recognize this as being an important flat correction. This is an ABC flat correction. And then what comes after is a 5-wave move. I know that's a 5-wave move, okay? So I'm just taking this as a 5-wave move and this as my initial break of structure, my A wave, okay? And what do we know about the A wave? Once you break structure, once you stop a trend, you target wave 4 of the previous trend. That's exactly what was done here, do you see, in these 3 waves. So what you're likely to do is put in your 3 waves, put in 3 more waves, right? As you started to do, you put your base of your B wave, and then put in your final impulsive wave. Now, how do I know that this isn't it, right? That these 3 waves aren't the exhaustive 3 waves of this correction, and then we can just go up. How do we know that? There's 2 reasons I know that. 2 reasons I know that this is a part of a compound, or this is a part of a compounded correction. Do you see what I mean? This is not a standalone. 2 reasons. One, we know that the minimum retracement for a wave 2 is the 382. We haven't hit the 382. Okay? On average, the minimum retracement of a wave 2 correction is the 0.382 Fibonacci retracement. We have not hit the 0.382. So that tells me it's unlikely, okay? Even though we're close, we pretty much haven't hit it, okay? And the second thing is, remember, when you're doing charting and analysis, you're not just looking at price, you're looking at time, okay? And the time is insufficient because we know that according to Elliott wave theory, waves of the same degree are comparable in time and in price. Waves of the same degree are comparable in time and price. So if I'm in this degree, I put in 5 waves in this degree, right? And it took me about 650 days. I know that if I start correcting, it's gonna have to take me close to 650 days to complete that correction. And this A wave right here is only taken about 150 days, okay? So I know that I still have about 500 days left for this ABC flat correction, okay? So if I take 500 and I, kind of assume that these impulses happen quickly, that's why we call them impulses. They happen quickly. So I'm not going to say, 250 days for the A wave or B wave and 250 days for the impulse, the C wave. No, I'm going to say it's more like 200 days or a little less than 200 days for the B wave. Or sorry, 200 days or a little less than 200 days for my my impulse, okay? And then about 280 to 300 days for my B wave, okay? So I'm going to take this, and my B wave has already started, okay? So it's not just, remember, you have to base these. So this is the start of the B wave was in May, okay, May 16th, as I see it. Okay, very close to Bitcoin's orthodox, or not Bitcoin's orthodox low, but most altcoins print their orthodox low on May 12th, okay? And that actually coincides with the beginning of the B wave in the S&P. How amazing is that, yeah? So if you look at this, to me, that is about, so far, we've taken about 105 days, okay? And what I say, this B wave to take about 300 days, 280, 300 days, that gives you about 180, 200 days, which is about 6 months. This is why I'm bullish for the next 6 months. That's reason number 2, okay? The reason number 1 was showing you Bitcoin and my larger chart analysis showing a projected minor wave 3 ending in Q1, more specifically February of 2022. That's about 6 months. Now I'm showing you this B wave in the S&P that's about to hit, that should hit the top of this resistance right here, which both coincides with 2 things, actually. It coincides with it. Guys, the more confluence you get in analysis, the more likely it is to play out. The more confluence you get in analysis, the more likely it is to play out. Okay, I'm going to show you something really interesting. If you project wave 1 of an Elliott wave, the minimum extension you should get for wave 5 is 2236. I'm not going to prove this to you mathematically right now, but there's solid math to be able to prove this, okay? Wave 1, minimum extension of wave 1 is 1 Fibonacci extension. You typically get an extension of 1618 to between 1618 and the 2. Minimum extension of wave 5 tends to be 1236 or 1618, or inverse 1618 of wave 4, or the 618 of wave 3. Okay, all that put together means that if you take your wave 1 Fibonacci, or if you take your wave 1 Elliott wave and your retracement of wave 2 you project the 2236 and you should get your minimum extension for your entire 5-wave impulse. Where do you see this 2236? Look at this 2236. Not only does it coincide with this 12-year resistance, right, that I showed you from 2009, 2010, okay, it also coincides with the maximum extension of the B wave with respect to the A wave, the phi ratio, the 1.618. So do you understand? There's too much confluence there. For me, if I'm in equities, if I'm in stocks, I'm looking and I'm long until we hit about 5,560. Everything points to 5,560. Everything points to 5,560, and we're not there yet. Okay, we still need to put in a few waves, and that's maybe a 40% hike from here. Okay, and the time it takes, once again, is approximately 180 to 200 days from now, which is about 6 months. Okay, I could give it about 6 months, because you have to put in a pivot there. So this is so yeah, I told you, I showed you all the confluences with this level, why we can go here. Okay, what else? Okay, yeah, that's my reason number 2. And then reason number 3, we're gonna look at the DXY, or the dollar. Okay, and let's have a quick look at Bitcoin. Are we getting our bounce? Okay, we seem to get our bounce. Okay, are we getting a stronger bounce in anything else? Looks like Litecoin is bouncing. Let's go on the 15-minute time frame. Guys, if you're getting value, please like the stream. I don't see anybody talking about this to this level of, at least for free. I don't charge for any of this, and I'm giving you everything I know, and I'm going into high levels of detail. I'm not holding anything back. I don't get paid by YouTube. I don't have a paid group or any courses that I charge for. I just get paid by my trades. The market pays me if you guys are able to get value, just like the stream. It's encouraging. Yeah, so Litecoin's getting a strong bounce. Let's see, Cardano's getting an even stronger bounce. SHIB's getting a strong bounce. Let's see, reserve rights. We're bouncing. Okay, obviously time will tell if this bounce holds, but it should. Given our analysis, this bounce should hold. This should not continue to the downside. Okay, let's see, Bitcoin again. Okay, and again, we are expecting a violent bounce here, for all of the high time frame reasons we stated. We're expecting a violent bounce here, so we'll see. Okay, now back to the third reason I'm really bullish for the next 6 months. Okay, let's go into the DXY. Now, why am I looking at the DXY? Automatically, my chart, it switches to let me go full screen again. Automatically, my chart switches to the daily time frame, because this is an index, right? That is only measured on the daily time frame, right? The dollar index is the measurement of it's basically a basket of currencies that the dollar's pegged against. Okay, I don't know exactly all of the different currencies that are included in here, but it's a good indication of what world currencies are doing. Okay, and up until now, we've been talking about inflation not only in America, but we've been talking about inflation all over the world, in Europe, in African countries, in Central and South American countries. Look at this. Let's zoom out on the weekly. Ever since about 2021, you've been getting inflation. The dollar has been gaining strength, right? This is exactly, this is visible on the charts, okay? And in the past, I actually let's zoom out again on the weekly time frame because I already charted this properly. Okay, so what you can see here is I put in cycle waves. So you can see 1, 2, 3, 4, 5 Elliott waves. Okay, everything. You can look at housing prices. You can look at the cost of energy. You can look at anything, gold, silver. According to Ralph Nelson Elliott, this is basically how humans tick. Greed and fear dictates that every asset can be charted in impulses of 5, whether up or down, and then retracements of 3, or variations, flavors of 3, okay? So here we have the dollar moving in 5 Elliott waves, impulsively, okay? This is exactly what we expect, okay? Now, it's reached the top of this move, and why do we know it's reached the top of this move? We have our cycle waves, our 5 cycle waves here. Actually, 1 second. Let me. We do not have our 5 cycle waves. We have our 4 cycle waves. 5 can be even higher, okay? Inflation can get a lot worse before it gets better. It's going to get better before it gets worse, but I think this chart is showing us basically that wave 5 is somewhere up here. Okay, and how do we project wave 5? 2 ways. I said it before. You can take the 618 or golden mean of wave 3. Okay, so that would be here. Okay, so these are just, estimate projections. So the 618 of wave 3, which would be around here. Okay, so around where we're at right now, actually. And the inverse 1618 of wave 4. So let's do that. Okay, you know what? We may be done. Because we may be done. That may be wave 5. I don't know why I didn't put in wave 5. Where's wave 5? Did I put it in here? No, see, I didn't put it in. I changed my mind. It's done. That's done. Okay, why? Just for the reasons I stated. Wave 5 can be projected by taking wave 3, taking the Fibonacci extension of wave 3, retracement of wave 4, and then projecting the 618. We did that, and that takes us to around where we're at. And then the second way is you take the inverse 1618, which is also the phi ratio of wave 4, and you can see that that is at 114. However, you can also typically get targets of 1236 or between 1236 and 1618, and that's exactly where we're at now. I believe that we're finished. Okay, this is why I believe we're finished, and this is it. Okay, heretofore I don't know why I put wave 5 up there, but that confused me. But this is it. This is it for the dollar. Okay, what you're gonna see right now, this is the extent of the inflation, not according to what Jerome Powell said, not according to my degree in macroeconomics. I have no such degree. I don't care. I don't watch C-SPAN. I don't care what the news says. I'm looking at the charts. Okay, I'm a chartist. I'm a wave technician, and looking at the DXY, the chart's telling me that this is it. Inflation can't get any worse. It's going to get better. If that's good news, or actually, you know what? Let's say inflation can't get that much worse, because if this is an initial break of structure, our B wave can go above that A wave, and then we can pivot and even reach above that. But in any case, right, it shouldn't get that much worse. That's all I'm saying, okay? But this is what I'm seeing in the dollar. For the next 6 months, we're not just getting a rejection, but we're getting an entire cycle break of structure. What does it, what's basic Elliott wave theory? 5 waves up, 3 waves down, okay? And in order to take those 3 waves down, you first have to put in that first initial break of structure, that A wave, okay? this A wave typically targets wave 4 of the previous trend. I say this all the time in the channel. Where do you think this A wave is going to come? Okay? And so now let's zoom in. Now we have a better understanding as to what's going on the larger time frames. And you always want to do this when you're charting, when you're trading, anything. Zoom out first, get some context, understand what you're looking at, and then zoom in. But if you zoom in and you don't have any idea about the context, it's very difficult to make sense of what you're looking at on the smaller time frames. Okay, so here we have an ending diagonal. This is it. I counted this. So on the smaller time frames, on the daily time frame, I count 1, 2, 3, 4, 5 waves, and I believe it's very likely that this is it for this impulse, because we have your quintessential ending diagonal, right? Fifth wave ending diagonal. You only get that at the end of a trend. Okay, so that's another reason why this trend is likely ending. Now, what did we get? We got an initial break of structure on the smaller time frame here, and that targeted wave 4 of the previous trend right here, and then a B wave. Okay, and that B wave on the daily time frame, you can see very clearly you've gotten a rejection. So if you use candlestick analysis, whenever you see a wick, right? So if you look at your candlestick and you see the wick and the body of the candle, right? This is the body of the candle, a strong wick to the upside. That's bearish, meaning that means there's strong selling pressure or strong resistance up top. Do you see that right here? It doesn't matter the color of the candle, actually. It could be red, it could be green. If you see a candle like this, right, that means the price is looking to go down, okay? And this is very, you can more, what's the word I'm looking for? It's more reliable on the higher time frame. So if you're looking at a daily time frame or a weekly time frame, bearish candle like this, you understand that something about this trend is going down, okay? Just like the opposite is true, okay? If you see a candle like this with the body and then the stick down here, that's bullish. It typically means there's strong buying pressure, okay? So that's just so you understand. This candle right here shows us that this pivot is basically over, okay? And we're pivoting into this trend. Remember, this is another flat correction, right? It's a 3-wave move, A, B, C. And now that you're pivoting, expect for this right here, this initial break of structure on the larger time frames to target wave 4 of this previous trend. So of the larger trend, remember the weekly trend, you see our cycle wave 4, this is our initial break of structure on the larger time frame. It's going to target wave 4 of the previous trend, right? It's going to show that, yes, we had 5 waves. Now this trend is up. I'm going to put in an initial break of structure, okay? And the approximate time that this can take is likely to be comparable with this entire move. So let's zoom back out on the weekly time frame, okay? Zooming back out on the weekly time frame, we can see that this entire cycle wave, okay, that you saw, let's leave that right here. Let's measure the time it took, okay? So from wave 1 to wave 5, it's about 4,150 days, okay? 4,150 days. It's likely that this entire move take 4,150 days thereabouts. Again, in terms of Elliott wave theory, waves of the same degree are comparable in time and in price, okay? So if this is 5 waves up, you're likely to get 3 waves down in a comparable manner, right? In the time it takes. So if we want to measure more or less the same amount of time, let's put in sorry, 1 second. Let's get some more space here. Okay. So about 4,000, we said 4,000 some odd days. Okay, let's see how many bars that was so that we can count it, okay? This is just a rough estimate, but again, Elliott wave theory is powerful because it gives you bearings. It gives you a decent, or a more or less some way to understand, okay, how more or less how long can this take? Okay, this is 592 bars, okay? 592 bars to go up. So inflation for 4,144 days. 5 waves up, you know? So we should expect 592 bars or something comparable, right? On the way down as well, right? But in 3 waves. Okay? And this is just the nature of fiat currency here, right? You're saying, well, Dean, what are you talking about? Like, you're saying that this is going to go up ad infinitum? That's the nature of fiat currency. You kind of keep going up. It keeps inflating. It's not deflationary. That's why cryptocurrency exists. It's a response to this issue, right? Try as you may, fiat currencies are devalued because of money printing, because of, you know, inflationary pressures. It just happens like that. So 5 waves up, 3 waves down, 5 waves up, 3 waves down, 5 waves up, 3 waves down. Yes, it will continue until something fundamentally changes, right? Maybe they adopt a cryptocurrency or a central bank digital currency that is more controlled algorithmically, so that, you know, this natural inflation pressure doesn't happen. But yeah, this is what we're looking at. So again, if you divide these 4,141 days into 3, and you don't know what kind of this is going to look like, right? You can get, you can get a complex correction, right, before your sorry, that's exaggeration, right? We expect, once again, for any retracement of a 5-wave move to be down to between the 382 and the 618, okay? But you don't know what you're going to get here. You can get all kinds of complex corrections. It can take, you know, quite long. But what we know is we won't be surprised if it takes 592 bars once again. Oops, 592 bars. Wait, what's going on here? Sorry, 1 second. Oh, I changed the chart, so it's a different count. So here it's 131 bars. Let's count 131 bars. Yeah, something like this. Okay. So in 3033, something like that, you know? 3033, something like that. We expect that downtrend, that deflationary pressure in the dollar to finally reach some sort of end. Okay, and that's a large time frame read, okay? I wasn't necessarily planning on talking about the dollar so extensively, but the whole purpose of my mentioning this is to say that your initial break of structure is typically swift, right? It's typically swift because it tells people, oh, the trend's changed. It's quick, right? And then the counter move tends to take all the time in the world, okay? Expect that B wave, as complex as it can be. It's probably going to be super complex because, remember, you have until about 2033 rather, before you pivot and finish that trend up. So, but that first move, I think, is going to be what takes us into the next bull run for equities and crypto. Okay, and that's why I'm bullish for the next 6 months. That's the third and final reason I'm bullish for the next 6 months. I'm looking on the smaller time frames on the daily, and I'm seeing, as I just stated, a rejection of the DXY at this level. Okay, it's a rejection because I count 5 waves here. I count an initial break of structure on the smaller time frames. I count a pivot. I see a pivot. I see a strong bearish candle on the daily time frame, right? Showing an exhaustion of this trend and a pivot into this new trend. I wouldn't be surprised if the next 6 months the dollar dropped like a rock. Okay, establishing the beginnings of a 10-year trend that's not just going to go in one direction. Okay, understand what I just showed is this. This is going to be an initial break of structure. It might be swift. It might take 6 to 8 months. I'm bullish for the next 6 to 8 months. But the majority of time for this ABC correction, at the end of the day, it's just going to be a simple flat correction, okay? The majority of the time, this ABC correction, let's go on the weekly time frame so it makes sense. The majority of the time, this is going to be consolidation and chop up and down. Nobody's going to be able to read it. It's going to be, difficult to read, more or less, but it's basically just going to be consolidative in this flat correction. And then finally, I think in 2033, we're going to find that impulse down again, right, to complete the flat correction. So this is what I'm seeing on the dollar. That's why I'm bullish in equities and crypto for the next 6 months, because of this initial break of structure. Okay, so those were the 3 reasons. Looking at crypto on the large time frames, looking at the S&P 500 on the large time frames, looking at the DXY on the large time frames, and as well the smaller time frames. If you guys missed that, just rewind. You can rewind this live stream as you wish. Now what I'm gonna do is I'm gonna go back on the smaller time frames and look how crypto's doing. Have we bounced? What of our